Question 1. Which of the following best describes the primary purpose of cyber insurance in risk management? A. To provide financial compensation for all types of cyber attacks. B. To cover only the direct financial losses resulting from a cyber incident. C. To transfer financial risk associated with cyber threats from businesses to an insurer. D. To provide legal defense for businesses facing data breach lawsuits. Answer: C. To transfer financial risk associated with cyber threats from businesses to an insurer. Explanation: cyber insurance is primarily designed to transfer the financial risk associated with cyber threats such as data breaches, malware, or ransomware attacks from the insured business to the insurer. This helps businesses manage the financial impacts of cyber incidents such as legal costs, data recovery, business interruption, and reputational damage. While legal defense may be part of some cyber policies, it is not the primary purpose of cyber insurance. Question 2, scenario-based. Emily is the Chief Information Security Officer (CISO) at a mid-sized healthcare company in Nebraska. She is in the process of applying for cyber insurance to cover her organization's risks. The company has recently undergone a data breach involving patient records, but no regulatory penalties have been imposed yet. The insurer asks for information about the company's incident response plan. What should Emily do in this situation? A. Disclose the breach and provide details of the incident response actions taken, as it is essential to demonstrate the company's handling of the event. B. Avoid mentioning the breach, as the insurer will not provide coverage for any incidents that occurred prior to the policy being issued. C. Provide a brief statement without details, focusing only on the company's commitment to cybersecurity in the future. D. Only disclose the breach if the insurer requests specific details related to the incident. Answer: A. Disclose the breach and provide details of the incident response actions taken, as it is essential to demonstrate the company's handling of the event. Explanation: when applying for cyber insurance, it is crucial to be transparent with insurers about any past incidents, including data breaches. Insurers typically evaluate the organization's ability to respond to cyber threats and mitigate risks. Failure to disclose past incidents or provide full details can result in denial of claims in the event of a future breach. The insurer will also use this information to assess the organization's risk management practices and determine appropriate policy terms, including premiums, as per regulations and industry best practices. Disclosing the breach and showing the incident response plan is vital for a comprehensive evaluation. Question 3. Which of the following is most likely to be excluded from a standard cyber insurance policy? A. Losses resulting from accidental deletion of digital records due to employee error. B. Costs associated with responding to a ransomware attack. C. Damages resulting from a deliberate cyber attack initiated by an employee within the company. D. Business interruption due to a distributed denial of service (DDoS) attack. Answer: C. Damages resulting from a deliberate cyber attack initiated by an employee within the company. Explanation: cyber insurance policies generally exclude coverage for intentional acts, which include damages resulting from a deliberate cyber attack initiated by an employee within the company. Most policies do not cover losses arising from fraud or intentional misconduct by the insured or its employees. On the other hand, accidental losses, ransomware response costs, and business interruption due to cyber threats like DDoS attacks are typically covered under standard policies. Depending on the specific terms and exclusions, intentional acts are explicitly excluded to prevent moral hazard and misuse of the insurance policy. Question 4. Which of the following best describes the role of third-party coverage in a cyber insurance policy? A. It covers the direct financial losses to the insured's business from a cyber event. B. It protects the insured against claims from external parties, such as clients or customers, for privacy or network security breaches. C. It only covers costs associated with the recovery of lost digital assets. D. It provides coverage for damages caused by natural disasters impacting the insured's data centers. Answer: B. It protects the insured against claims from external parties, such as clients or customers, for privacy or network security breaches. Explanation: third-party coverage in a cyber insurance policy is designed to protect the insured against liability claims from external parties, such as customers, vendors, or business partners, for incidents like data breaches or network security failures. These claims could arise if the insured systems compromise personal data or cause financial harm to a third party, while first-party coverage deals with losses suffered by the insured directly. Third-party coverage addresses claims from others impacted by the insured's cyber risks. Question 5. Scenario-based. John is the IT director of a retail company that has recently experienced a data breach affecting customer payment card information. John quickly contacts the company's cyber insurance provider and provides a notification of the breach. What additional steps should John take to ensure that his company is fully prepared to handle the breach under the insurance policy? A. Wait for the insurer to send a claims adjuster before taking any further action. B. Begin working with a cybersecurity expert to assess the extent of the breach and prevent further damage, as the insurer may require this for the claim. C. Only focus on notifying the affected customers and ignore other obligations under the insurance policy. D. Immediately remove all employees' access to the company's systems without documenting the steps taken. Answer. B. Begin working with a cybersecurity expert to assess the extent of the breach and prevent further damage, as the insurer may require this for the claim. Explanation. After notifying the insurance provider, it is essential for John to engage with a cybersecurity expert to assess the breach's impact, mitigate further risks, and secure evidence. Many cyber insurance policies require the insured to act quickly and take steps to minimize the damage, as failure to do so could affect the claim. Additionally, insurers often require a thorough assessment of the breach and may cover the costs of hiring a cybersecurity expert. This action also ensures that the company complies with best practices for incident response and can provide the necessary documentation for the claim. Question 6. What is the primary purpose of cyber insurance underwriting? A. To predict the likelihood of future cyber incidents based on industry trends. B. To assess the financial value of the insured business for policy pricing. C. To evaluate the insured's current cybersecurity measures and potential exposure to risks. D. To determine the number of employees at the insured company. Answer. C. To evaluate the insured's current cybersecurity measures and potential exposure to risks. Explanation. The primary purpose of cyber insurance underwriting is to evaluate the insured's cybersecurity posture, including its current measures, policies, risk exposure, and potential vulnerabilities. The underwriter uses this information to assess the risk level associated with the insured, which influences the policy's pricing, terms, and coverage limits. Factors such as the company's incident response plans, employee training, use of firewalls, and compliance with cybersecurity standards e.g. NIST ISO 27001 are critical in underwriting decisions. While other factors like financial stability and industry trends may be considered, the key focus is on understanding the insured's risk profile. Question 7. Which of the following is a common exclusion in a cyber insurance policy? A. Costs related to a network security failure impacting customer data. B. Damages caused by a cyber attack that was initiated by a company's executive. C. Coverage for legal fees associated with defending a lawsuit resulting from a privacy breach. D. Costs associated with the restoration of digital assets after a ransomware attack. Answer. B. Damages caused by a cyber attack that was initiated by a company's executive. Explanation. Cyber insurance policies typically exclude coverage for damages arising from intentional acts, including those initiated by a company's executives. This exclusion is designed to prevent moral hazard where an employee or executive might intentionally cause harm or commit fraud. While the types of coverage, such as network security failures, legal fees related to privacy breaches, and ransomware recovery, are typically covered under standard policies, damages resulting from deliberate actions by the insured or its executives are generally excluded. Question 8. Which of the following is an example of hybrid coverage in a cyber insurance policy? A. Coverage for business interruption due to a virus infection on the insured's network. B. Liability for privacy violations combined with the cost of crisis management after a cyber attack. C. Protection against internal employee errors and external cyber attacks. D. Legal defense against lawsuits from third parties and loss of income due to system downtime. Answer. B. Liability for privacy violations combined with the cost of crisis management after a cyber attack. Explanation. Hybrid coverage in a cyber insurance policy combines multiple types of coverage in one policy to address various risks associated with a cyber event. In this case, combining privacy liability and crisis management costs addresses both the potential legal liability arising from privacy violations and the associated costs of managing the aftermath of cyber attacks, such as public relations efforts and breach notifications. Hybrid coverages are designed to provide a comprehensive response to complex incidents, offering more than one type of protection. Question 9. Which of the following cybersecurity standards is commonly referenced in the underwriting process of cyber insurance? A. ISO 9001. B. ISO 27001. C. HIPAA. D. PCI DSS. Answer: B. ISO 27001. Explanation: ISO 27001 is a widely recognized standard for information security management systems (ISMS). It is commonly referenced in the underwriting process of cyber insurance because it helps insurers assess an organization's commitment to cybersecurity practices and its ability to manage information security risks. Compliance with ISO 27001 demonstrates that an organization has implemented a structured framework for securing sensitive data and protecting against cyber threats. While other standards like PCI DSS, Payment Card Industry Data Security Standard, and HIPAA, Health Insurance Portability and Accountability Act, are important for specific industries, ISO 27001 is a general standard applicable across various sectors. Question 10. Which of the following is NOT typically covered under first-party cyber insurance coverage? A. Costs associated with investigating a cyber attack. B. Loss of digital assets due to a ransomware attack. C. Legal fees from defending against a third-party lawsuit. D. Business interruption caused by a data breach. Answer: C. Legal fees from defending against a third-party lawsuit. Explanation: first-party cyber insurance coverage typically covers the insured's direct losses such as investigation costs, digital asset restoration after a ransomware attack, and business interruption losses due to a cyber incident. Legal fees arising from defending against a third-party lawsuit are typically covered under third-party liability coverage, not first-party coverage. First-party coverage is designed to address the insured's own losses, while third-party coverage protects the insured from claims made by external parties. Question 11. Which of the following is typically covered by a cyber insurance policy's business interruption coverage? A. Legal fees incurred from defending a lawsuit after a cyber attack. B. The cost of recovering digital assets lost in a cyber attack. C. The loss of income due to system downtime caused by a ransomware attack. D. Damages caused by a cyber attack initiated by an employee. Answer: C. The loss of income due to system downtime caused by a ransomware attack. Explanation: business interruption coverage in a cyber insurance policy typically covers the financial losses associated with system downtime, including lost income resulting from a cyber attack such as a ransomware attack. This coverage helps businesses recover from disruptions in operations that prevent them from generating revenue due to the inability to access their systems or data. Question 12. Scenario-based. Sarah's company has a cyber insurance policy that covers the costs of recovering lost digital data after a ransomware attack. However, the company decides not to pay the ransom and instead restores its data from backup. What costs will be covered under the company's policy in this situation? A. Only the costs of paying the ransom. B. Costs associated with restoring the data from backup. C. No costs will be covered since the ransom was not paid. D. Only legal fees associated with the ransomware attack. Answer: B. Costs associated with restoring the data from backup. Explanation: if the company decides not to pay the ransom and instead restores the data from its backups, the costs associated with restoring the data from backup will typically be covered under the policy's first-party coverage. Many cyber insurance policies cover the costs of data recovery, regardless of whether the ransom is paid, as long as the company makes reasonable efforts to mitigate the impact of the attack. Question 13. What is the primary purpose of a retroactive date cyber insurance policy? A. To specify when the insurance coverage will begin. B. To limit the coverage of cyber incidents that occurred before the policy's start date. C. To define the length of the policy's term. D. To set the date when the insured must report a claim. Answer: B. To limit the coverage of cyber incidents that occurred before the policy's start date. Explanation: a retroactive date in a cyber insurance policy is the date from which incidents are covered. It limits the insurer's liability for claims arising from cyber events that occurred before the retroactive date. Any incidents that took place prior to this date are typically excluded from coverage, even if they are discovered after the policy begins. This is important for ensuring that the insurer is not held liable for claims relating to past incidents that occurred before the policy was in force. Question 14. Which of the following types of incidents would most likely be covered under a cyber insurance policy's data breach liability coverage? A. A denial of service attack that causes network downtime. B. A breach involving unauthorized access to customers' personal data. C. A system failure due to outdated software. D. A natural disaster that destroys data centers. Answer: B. A breach involving unauthorized access to customers' personal data. Explanation: data breach liability coverage is designed to cover the costs and liabilities associated with a breach of sensitive data, such as customers' personal or financial information. This coverage typically includes legal fees, notification costs, and any expenses related to defending the company against claims arising from the breach. Denial of service attacks, system failures, and natural disasters are typically covered under different sections of a cyber insurance policy, such as business interruption or property damage coverage, but data breach incidents are specifically addressed under data breach liability. Question 15. What is the term social engineering in the context of cyber insurance? A. The use of artificial intelligence to enhance cybersecurity measures. B. A technique used to manipulate employees into divulging sensitive information or performing actions that compromise security. C. The practice of hacking into social media accounts for malicious purposes. D. The design of firewalls to prevent unauthorized access to social media platforms. Answer: B. A technique used to manipulate employees into divulging sensitive information or performing actions that compromise security. Explanation: social engineering refers to the manipulation or deception of individuals into revealing confidential information or taking actions that compromise security. This can include phishing attacks, pretexting, and baiting, among others. Cyber insurance policies may include coverage for financial losses resulting from social engineering attacks, as they are a growing risk in the cyber threat landscape. Question 16. Which of the following would be most important for an organization to consider when purchasing cyber insurance for the first time? A. The maximum payout amount under the policy. B. The number of employees the company has. C. The cost of the premium regardless of coverage limits. D. Whether the insurance policy includes coverage for physical property damage. Answer: A. The maximum payout amount under the policy. Explanation: when purchasing cyber insurance for the first time, one of the most important considerations is the maximum payout coverage limit provided by the policy. This determines how much financial protection the company has in the event of a cyber attack or data breach. The coverage limit should be adequate to cover the potential costs of a cyber incident, including legal fees, data recovery, notification costs, and business interruption. Question 17. Scenario-based. A manufacturing company recently purchased cyber insurance but did not have an incident response plan in place at the time of purchase. A cyber attack occurs and the company experiences significant downtime. The company has to create and implement an incident response plan during the attack. How would this affect the company's cyber insurance coverage? A. The company may be denied coverage since it failed to have a response plan in place. B. The insurer will pay for the costs of creating the incident response plan during the attack. C. The insurer may reduce the coverage or deny the claim due to the lack of a pre-existing incident response plan. D. The insurer will not consider the lack of a response plan in the claim process. Answer: C. The insurer may reduce the coverage or deny the claim due to the lack of a pre-existing incident response plan. Explanation: many cyber insurance policies include requirements for the insured to have an incident response plan in place before a cyber incident occurs. This is to ensure that the company is prepared to handle breaches and minimize damages. If a company does not have an adequate plan in place when an attack occurs, the insurer may reduce coverage or deny the claim based on the policy's terms, which could include an expectation of proper risk management measures being in place. Question 18. Which of the following best describes cyber liability coverage in a cyber insurance policy? A. It provides coverage for the physical damage caused by a cyber attack. B. It covers the costs associated with recovering from a cyber attack and the resulting liabilities. C. It insures against the failure of the insured's hardware and software systems. D. It only covers the loss of income due to cyber attacks. Answer: B. It covers the costs associated with recovering from a cyber attack and the resulting liabilities. Explanation: cyber liability coverage is a broad category of coverage in a cyber insurance policy that includes both first-party and third-party coverage. First-party coverage may include costs for recovery, such as data restoration, business interruption, and notification costs. Third-party coverage addresses the liabilities the company faces from external parties, such as customers or partners, who are affected by the cyber incident. Cyber liability coverage is essential for managing the wide-ranging financial impact of a cyber attack. Question 19. What is cyber extortion coverage in a cyber insurance policy? A. Coverage for data breaches caused by external hackers. B. Coverage for the cost of hiring experts to investigate a cyber attack. C. Coverage for losses related to ransomware attacks or other forms of extortion. D. Coverage for damages caused by employee errors. Answer: C. Coverage for losses related to ransomware attacks or other forms of extortion. Explanation: cyber extortion coverage is a specific type of coverage under a cyber insurance policy that protects businesses from financial losses due to extortion attempts, such as ransomware attacks. In these cases, cybercriminals demand payment, usually in cryptocurrency, in exchange for not releasing sensitive data or for ceasing an attack. This coverage may include costs related to paying the ransom, legal fees, and other related expenses. Question 20. Which of the following factors typically influences the cost of a cyber insurance premium? A. The size of the company's workforce. B. The level of cybersecurity measures implemented by the company. C. The company's revenue generation model. D. The number of years the company has been in business. Answer: B. The level of cybersecurity measures implemented by the company. Explanation: the cost of a cyber insurance premium is influenced by the company's cybersecurity measures, such as the implementation of firewalls, data encryption, employee training, and incident response plans. Insurers assess the level of security the company has in place to determine the likelihood of a cyber event and the potential financial impact. The more robust the company's cybersecurity framework, the lower the premium, as it reduces the risk of a claim. While other factors like company size may also be considered, the emphasis is typically on cybersecurity readiness. Question 21. Which of the following is typically excluded from a cyber insurance policy's coverage? A. Costs associated with a data breach involving customer credit card information. B. Legal expenses related to defending against a lawsuit from a third-party vendor after data breach. C. Damages resulting from intentional acts by an employee. D. Costs to restore data after a ransomware attack. Answer: C. Damages resulting from intentional acts by an employee. Explanation: cyber insurance policies typically exclude coverage for damages resulting from intentional acts committed by the insured, including acts of fraud or sabotage by employees. This is often referred to as the intentional acts exclusion, which limits coverage for malicious activities that the insured or its employees knowingly caused. Question 22. Which of the following cyber risks would be covered by a typical cyber insurance policy's third-party liability coverage? A. Loss of data due to a cyber attack. B. Legal costs for defending a lawsuit from a client whose data was breached. C. Costs associated with restoring a company's IT systems. D. Business income lost due to downtime caused by a cyber attack. Answer: B. Legal costs for defending a lawsuit from a client whose data was breached. Explanation: third-party liability coverage under a cyber insurance policy typically covers legal expenses and liabilities incurred when a third party, such as a customer or business partner, suffers damages due to the insured's failure to protect sensitive data. It often includes legal defense costs and settlements or judgments resulting from data breaches or other cyber incidents. Question 23. Scenario-based. A company's computer systems are compromised by malware, resulting in a data breach of customer personal data. The company incurs legal costs, notification costs, and costs to restore the data. The insurance policy has a $500,000 coverage limit. If the total cost of the breach is $450,000, what will the insurer pay? A. $500,000, since it is below the coverage limit. B. $450,000, as it is the total cost of the breach. C. The insurer will only pay up to $450,000 but will not cover the legal costs. D. $500,000, but the company must pay a deductible. Answer: B. $450,000, as it is the total cost of the breach. Explanation: if the total cost of the breach is less than the coverage limit, the insurer will typically pay the full amount of the loss up to the coverage limit. Since the total cost of the breach is $450,000, the insurer will pay this amount. Any costs beyond the coverage limit would not be covered. Question 24. What is the primary purpose of the waiting period ECA cyber insurance policy? A. To define how long the policyholder must wait before reporting a cyber incident. B. To limit the insurer's liability for incidents occurring during the waiting period. C. To establish the time before the insurer will cover business interruption losses. D. To reduce the premium cost for policyholders with a high level of cybersecurity. Answer: C. To establish the time before the insurer will cover business interruption losses. Explanation: the waiting period is a provision in many cyber insurance policies that establishes a period of time after a cyber incident before business interruption coverage applies. This is similar to a deductible period during which the policyholder must absorb losses. The waiting period is designed to account for minor disruptions and to ensure the insurer only covers more significant interruptions. Question 25. Which of the following actions is most likely to reduce a company's cyber insurance premium? A. Increasing the deductible amount on the policy. B. Reducing the amount of data encryption used within the organization. C. Relying on cloud services instead of in-house IT infrastructure. D. Reducing the frequency of employee cybersecurity training. Answer A. Increasing the deductible amount on the policy. Explanation: increasing the deductible is a common way for companies to reduce their cyber insurance premium. By opting for a higher deductible, the company assumes more financial responsibility for smaller claims, thus reducing the insurer's risk. This generally results in a lower premium. Reducing data encryption, relying on cloud services, or reducing employee training would likely increase premiums by increasing risk. Question 26. In a cyber insurance policy, what is network security liability coverage designed to address? A. Coverage for business interruption due to a cyber attack. B. Coverage for damage to hardware caused by malware. C. Coverage for lawsuits resulting from a failure to protect the insured's network from external attacks. D. Coverage for legal costs resulting from a data breach. Answer C. Coverage for lawsuits resulting from a failure to protect the insured's network from external attacks. Explanation: network security liability coverage is designed to cover the insured's liability in the event that their network is breached or compromised due to security vulnerabilities that they failed to protect against. This may include lawsuits or claims from customers, partners, or other third parties who are affected by the breach. Question 27. Which of the following best describes cybercrime coverage in a cyber insurance policy? A. Coverage for losses resulting from hackers or fraudsters using technology for illegal purposes. B. Coverage for financial losses related to the company's own internal errors or omissions. C. Coverage for the loss of data or information from a natural disaster. D. Coverage for physical damages to hardware resulting from cyber attacks. Answer A. Coverage for losses resulting from hackers or fraudsters using technology for illegal purposes. Explanation: cybercrime coverage provides protection for losses that occur as a result of illegal activities conducted through digital means, such as hacking, fraud, or identity theft. It covers the financial impact of cyber criminals targeting the insured company or its customers, including losses related to theft of funds, data breaches, or other illicit acts. Question 28. Scenario-based. A retailer with cyber insurance is hacked and customer credit card information is stolen. The insurer covers the cost of data breach notification and customer credit monitoring. The insurer also provides coverage for legal defense against a lawsuit. What additional costs might the insurer cover under this scenario? A. The cost of restoring the company's reputation. B. The cost of the company's own internal investigations. C. The cost of repairing the company's physical infrastructure. D. The loss of business income due to the downtime caused by the hack. Answer B. The cost of the company's own internal investigations. Explanation: in the event of a data breach, insurers may cover the costs associated with internal investigations to determine the cause and impact of the breach. This can include forensic investigations, the hiring of cybersecurity experts, and other expenses required to assess the scope of the incident. However, insurers generally do not cover costs like restoring the company's reputation or repairing physical infrastructure unless specific coverage is included. Question 29. What is the key difference between first-party and third-party coverage in a cyber insurance policy? A. First-party coverage applies to external claims, while third-party coverage applies to internal claims. B. First-party coverage protects against losses the company itself incurs, while third-party coverage protects against losses to others caused by the company. C. First-party coverage is optional, while third-party coverage is mandatory. D. There is no difference. Both terms refer to the same type of coverage. Answer B. First-party coverage protects against losses the company itself incurs, while third-party coverage protects against losses to others caused by the company. Explanation: first-party coverage protects the policyholder, the company, from losses it directly incurs, such as data restoration costs, business interruption, or notification expenses following a data breach. Third-party coverage, on the other hand, covers the policyholder's liability for damages to others, e.g., customers, partners arising from a cyber incident, such as a data breach that affects client information. Question 30. Which of the following is an example of a claims-made cyber insurance policy? A. The policy covers all cyber incidents regardless of when they occur as long as the policy is active. B. The policy only covers incidents that occur during the policy period, but claims can be made after the policy expires. C. The policy covers any cyber event that occurs before the policy starts as long as it is reported within 30 days. D. The policy only covers claims made during the policy period, regardless of when the incident occurred. Answer D. The policy only covers claims made during the policy period, regardless of when the incident occurred. Explanation. A claims made policy covers claims made during the policy period, regardless of when the incident causing the claim occurred. This type of policy requires that the claim is reported while the policy is in effect, which is an important distinction from an occurrence-based policy, which covers incidents that happen during the policy period, regardless of when the claim is made.